While so many were focused on the Mueller hearing today, the biggest news out of Washington this week, aside from the Justice Department's decision to crack down on America's biggest and best tech companies, was the debt ceiling deal. Nobody talked about it. Congress agreed to lift the debt limit through 2021. They also got rid of the last budget caps from the 2011 sequestration deal. Now, what does that mean? It means the companies that feed at the federal trough are safe for the next 2 years. And nobody's more reliant on government spending than defense contractors. The only question is, which one should you buy? Well, I've got a brand new play in the defense space, and it's the best one. It's called L3Harris Technologies. It's the company created by the merger of Harris Corporation, which you know we like, and L3 Technologies, an old friend of the show, which was completed at the beginning of this month. This was a brilliant combination. It's created the most high-tech operator in the industry, and that's what makes L3Harris incredibly compelling. So let me break it down for you. I've been a big fan of the old Harris for years, ever since its last big merger with Exelis in 2015. We had the CEO of Exelis on at that time, and I was just salivating over this deal. Harris made wireless equipment, electronic systems, and terrestrial and space-borne antennas, mostly for the defense sector. Think secure radios, tactical communications networks, embedded encryption systems, military information technology systems. Exelis had a lot of overlap, but they also brought night vision goggles, electronic warfare, radar, and reconnaissance systems to the table. At the time, I told you that William Brown, Bill Brown, everybody calls him, the CEO of Harris, deserves the benefit of the doubt because he had such a terrific record of integrating large acquisitions. Back then, a little over 3 years ago, the stock was trading at just under $80 when we really told you this is the one to own in the group. By the time the L3 merger was announced in October, it was in the 150s. Now that Harris and L3 have combined, well, it's at $198. This spectacular 155% gain that was gettable. I know people want to just hide in index funds. We push this and push this. How about L3 Technologies? Again, a lot of overlap. They make communications and electronic systems for the military, homeland security, and commercial aviation customers. They've also got some cybersecurity exposure, protecting the Department of Defense against hackers. Good contract. That overlap is why the merger with L3Harris made so much sense. It gives the combined company more scale, which allows them to cut costs and strike better bargains with governments around the world. The new L3Harris is the 6th largest defense contractor in America. The deal also lets them invest more heavily and more efficiently in innovation. It's the same reason why United Technologies is merging the defense business with the tech-heavy Raytheon, although I have to tell you, in terms of companies that are being run well, I think L3 and I think Harris are better run than Raytheon. Plus, purely from the perspective of the numbers, this deal was incredibly compelling. We're talking about $500 million in annual pre-tax cost synergies. By the third year after the closing, the company's expecting to generate $3 billion in free cash flow. That's up from $1.9 billion now. That's incredible. Technically, Harris is the acquirer, and Harris shareholders are getting 54% of the combined company. But they bent over backwards to accommodate L3. Basically, this is as close as it really can get for a stock-for-stock merger of equals. They usually aren't like this, which means it didn't hurt the balance sheet and didn't hurt anybody's feelings. Best of all, both companies have great management. The best executives are staying on board. Bill Brown from Harris remains the chairman and CEO. Remember, this is the guy who did such a fabulous job integrating Exelis. Now, get this. L3's former CEO, Chris Kubasik, has now become the chairman, president, and chief operating officer at L3Harris. But these two are going to switch jobs. When Brown retires in 2 years, Kubasik will take the reins. Highly unusual. Again, a sign that this is a true merger of equals. It's a great story. The day the deal closed, I got a chance to speak with both gentlemen on Squawk on the Street. They made it clear that L3Harris is levered to the most consistent parts of the defense budget. Listen to Harris's Bill Brown.
We're a technology company. In fact, we're a mission solutions provider. We don't do ships. We don't do planes. We provide equipment on those ships and planes that make them work better, new aircraft, new ships, as well as legacy aircraft and legacy ships. So we provide equipment that makes those platforms work better.
Wow. So in other words, they're less levered to any one project and more levered to a wide array of solutions to help all sorts of defense platforms more effective. Not just one plane, not just one ship, a whole slew. They've got a huge intelligence and surveillance business. That's the stuff that never goes out of style, particularly when you're in a Cold War with the Chinese. So now that Harris and L3 have joined forces, what's the plan here? First and foremost, they're all about investing in research and development. I can't stress this enough. L3Harris is a high-tech company that makes extraordinarily complex products. It's valuable to the Pentagon and other defense contractors precisely because of its technical expertise. Second, management's in the process of integrating the two companies. That means optimizing the supply chain and eliminating unnecessary overhead. In total, L3Harris expect their annual cost savings to come to 1.8% of sales. However, they pointed out that when Harris bought Exelis, guess this, they predicted savings would come in at 1.4. It came in at 1.7. Big deal. Third, they want to reward their shareholders. They made that point to me on and off camera. This is their big focus. Right out of the gate, the company announced a 10% dividend boost, and they added $4 billion to their buyback authorization. And they expect to spend $2.5 billion of that money over the next 12 months. That's one of the reasons why the stock's been going up right now. Even after that increase, the stock still sports a 1.5% yield. But management says they'll consider raising the payout again in the first quarter of next year. But the buyback meant $4 billion. That is substantial. Remember, this is only a $44 billion company. They're going to be in there every day. They mean to plan to retire roughly 9% of the share count, including more than 5% over the next year. I hope when I bump into you on the street that you're thinking about this one. All right, there's a lot to like here. So it's no wonder L3Harris has already had a nice run. After initially washing out on the first day of trading, got hammered for no reason. Told you to buy it. Again, the stock has climbed nearly $20 from its close on July 1st. At these levels, it's trading at 18 times next year's earnings estimates or 15 times 2021 numbers. That's a slight premium to the rest of the group. Boeing sells for 16 times, Lockheed Northrop sells for 15, General Dynamics sells for 14. It also has a lower yield than the other players in the space. However, I think L3Harris deserves the premium because it's the most technologically oriented, difficult, proprietary defense contractor there is. It's probably the least levered to any individual project that might potentially be cut, just in case we have a budget. Someone decides, you know what, we got to cut the defense budget. Plus, it's trading at a discount compared to the average stock in the S&P 500 if you look at 2021 earnings. Really, if you buy this one right here, you're betting that management will be able to over-deliver when it comes to the cost synergies from the deal, just like they did with the Exelis acquisition. By the way, that's exactly why Goldman Sachs initiated coverage on L3Harris with a buy rating and a $240 price target just 2 weeks ago. So they're out there locked and loaded. Their thesis, they think the company can beat Wall Street's consensus earnings estimates in short order. And they believe that L3Harris is poised to take market share in the Pentagon budget thanks to their technology-rich product offerings. They're in some of the strongest parts of the defense sector. Both companies had strong numbers the last time they reported, and management has a tremendous track record. Now, the company reports next Wednesday. It's before the open. And in all honesty, I'm not quite sure what to expect because of all the moving parts. But I like L3Harris so much that I think you should be prepared to buy it if the quarter's confusing, which it very much might be, and the stock pulls back. Although, get this, I would not be adverse to you buying stock tomorrow right here and then waiting for the quarter to buy more. That's the level of conviction I have with the new L3Harris Technologies, LHX. Craig in Tennessee. Craig.
Jim, a big War Eagle booyah from Nashville, Tennessee.
Nashville, the area is booming. It's also great real estate investment down there. What's going on?
iRobot Corporation, IRBT, lowered guidance for the rest of the year because of the trade war. Stock has plunged 20%. Is it a buy?
Not yet. I mean, we did work on this today with my Action Alert group. Here's the deal. When you have a decline like this, that means there are still some sellers out there who didn't get done. I think you've got to wait until next week if you want to, but I don't like it. I don't like it. I don't like big surprises down. Not my cup of tea. Terry in Missouri. Terry.
Jim, thanks for taking my call.
No problem.
First-time caller, long-time listener, and student.
First time, long time.
Hey, what do you think of U.S. Steel? I mean,
no.
It's at the low point.
No.
Go ahead.
No, I'm a balance sheet guy. If U.S. Steel goes up, which it very well may, I would much rather have you be in Nucor. Why Nucor? Because you got a dividend, you can sleep at night, and you got a better balance sheet. And I have seen huge amounts of money lost in steel stocks with bad balance sheets. And we know what we're talking about, whether it be everything from Wheeling to Jones and Laughlin to, well, let's just say some of the more lamented ones like Bethlehem Steel. I think that L3Harris is a great long-term investment. even if it gets hit on earnings, you could buy into weakness. Maybe we should buy that for action alerts. I'm trying to figure out whether to tell club members it's right. Okay, much more Mad Money. While the Fed looks like it's set to cut short-term interest rates, what does it mean for let's say for a regional bank company like First Horizon? Aren't they supposed to get hurt here? I'm going to talk to the CEO. Then what does the Cloud Kings earnings report signal for the rest of the sector? I'm going to sit down with the CEO of ServiceNow, one of our favorites, to break down its latest report. And all your calls are rapid fire in tonight's edition of the Lightning Round. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.